The market is in fear now. Given the tariff imposed by the USA, and we can already see how the stock market reacted in the recent weeks. Are you panicked, selling all your stock now, or you have a strategy? Many investors have turned to traditional assets, and there's one investment that stood the test of time, which is gold. In the Asian society, we always receive and give gold as a present on birthday or wedding. In today's uncertain world, gold isn't just a shiny metal. It is a pillar of stability, a trusted haven for investors when everything else seems unpredictable. Gold has been a cornerstone for the wealthy and security for over thousands of years. From the time ancient civilizations used it for trade to modern investors buying bullions and stocks, gold has weathered the storm of market volatility, inflation, and geopolitical instability. So why is gold considered a safe haven, and how can it protect you during the time of uncertainty? Let's go back to the brief history of gold as a safe haven. Take a step back and look at the long history. It's not just about its intrinsic value or beauty. Gold has been seen as a store of value for over 3,000 years. Ancient Egypt, Mesopotamia, and the Roman Empire all used gold as a currency and a way to safeguard wealth. Fast forward to today's 20th century, and during the Great Depression, gold was still a reliable store of value when stock market and banks were collapsing. The 1970s also served as a key historical point. Amid soaring inflation and the breakdown of the Bretton Woods system, which tied currency to gold, we saw gold prices surge to new heights. Investors fled to gold as the US dollar lost its purchasing power. The same story played out during 2008 global financial crisis. Gold price soared as investors sought refuge from tumbling stock markets, low interest rate, and the collapse of financial institutions. Now we have established gold long history. Let's dive in why it is still considered a safe haven in today's society. Firstly, gold is used to hedge against inflation. It has a unique ability to retain its value over time, particularly during periods of high inflation. Unlike paper money, which can be printed at will, and the supply of gold is limited. When inflation rises, the value of fiat currencies will decrease, but gold tends to increase in value, making it as an effective hedge. This was evident in the 1970s, and when the inflation of US reached double digit and the gold price skyrocketed. Gold is less correlated with other assets. Unlike stock, bonds, or real estate, they are tied to the changes in interest rate. The price of gold don't always move in the same direction. So during the market uncertainty, when the market crash or financial crisis, gold tend to move in the opposite direction. So this non-correlation with other assets makes it an effective diversification tool in the portfolio, and it helps to reduce overall risk during turbulent times like right now. Gold is a global asset. It is universally recognized and accepted. It is not tied to just one country or currency. Gold price often rises as global investors look for a safe place to park their money. There are different types of investment that you can consider. Firstly is the physical gold in the form of bullions or coins. Buying the gold bar from the shop is the most direct way to invest in the metal. With physical gold, you own a tangible asset. There is a risk to store the gold at your home, and usually people will put it into a place like banks, and that will incur fee like storage and even insurance fee. Second is gold ETF. So I personally prefer to invest in a gold ETF, which track the price of the gold over time and offer a more liquid way to invest without having to keep and store the physical gold itself. These gold ETF are easy to trade on the stock exchange, just like any stocks. You can buy and sell during trading days. And the best part is you do need to always keep the gold with you, especially when you are traveling or living in the camper van like us. Third is gold mining stocks. Investing in gold mining companies allows you to potentially profit from the price of gold and the company's success, just like investing in certain sectors in the stock market. However, gold stocks come with additional risk, as the value is not tied to the price of gold. Gold has consistently outperformed the market during turbulent time. For example, during 2008 financial crisis, gold price increased while the S&P 500 lost over 37%. More recently in 2020, when the pandemic happened and the global market crashed, gold rose by more than 25%, hitting record highs above $2,000 an ounce. Looking at the long-term performance, gold has generally provided an average annual return of around 8% over the past few decades. It is not as high as the stock market long-term return. The key advantage of gold is that it's able to hold its value in the face of economic uncertainty. When you're expecting a volatile stock market, it is a bet to a bearish stock market. Why is gold still relevant today? We are currently facing uncertain economic landscape given the potential tariff from the USA, the AI tech stock bubbles, and the geopolitical tension. When the market is unpredictable, gold offers a sense of security. Moreover, with central banks continue to print money to stimulate economy, the risk of inflation and currency devaluation is ever present. In this environment, gold remains a valuable asset for anyone looking to preserve and protect their wealth. So in conclusion, gold's ability to act as a hedge against inflation is low correlation with other assets, and its long-standing role as a store of value make it a safe haven during market uncertainty. While no investment is without risk, gold offers a unique combination of stability, security that make it essential part of any diversified portfolio. If you're looking to protect your wealth from unpredictable twists and turns of the global market, gold may just be the shield that you need. So whether you are a seasoned investor or just getting started, consider adding a bit of the gold into your portfolio. It might be the most stable investment that you can make during uncertain times. Thank you for watching this video. Drop your comment below if you have any questions, and subscribe to our channel to support us and the algorithm. Yeah, see you again in the next one. Goodbye.